Hello all, welcome to Pivotal Traders. It's been long since I made any expiry video, but your enthusiasm is motivating me to keep coming onto the YouTube and share the knowledge. So let's get started regarding the tomorrow's plan. So today I will be starting with Nifty because lot many viewers are complaining that why don't I analyze Nifty. So let's do Nifty first today and see what is there in our kitty. So for the Nifty, if I want to make a sense from the open interest data, I can see that the PCR was quite bullish throughout the day and it was able to maintain its high of around 1.01. And so that was happening when the call writing was very steadily increasing. Sorry, the put writing, and the calls were not able to buckle up confidence of writing, and they were like very sluggish and was unnoticeably was declining throughout the day. So you can see hesitance was there on the call side, and similarly if you see the OI stats, then we can see that heavy call writing was only prevalent at 18,000, which is quite far away, and not quite far away, only 200 points away, and 17,700 is the nearest point where put writing is a little bit okayish, but you can see that more of a call writing is there still in the Nifty. So we can see, even though that there was a bull run today, there might be a pressure on the upside for the Nifty tomorrow being a expiry day. Now if I talk about the option chain here, and in the option chain we can see that the OI change which happened was somewhere around 17,700 on the put side. So 17,700 is a good confidence point for the put writers. So let us mark over there in the chart 17,700. Let me take Nifty. So 17,700. So yeah, 17,700 would be the mark where the maximum put writing has taken place. So this would be a point of interest for us. Let's denote it by blue line. now now on the call side, if you can see that there was not much writing near to the at the money. So it was only around 18,050 where there was a maximum addition on the call side. So 18,050 will be marking on the call side here. Excuse. So this is what we have in terms of the open interest data, and in terms of the PCR, it looks quite bullish. Now if I have to make a sense out of here that if the market opens flat tomorrow, then what can be the expected movements in the bank in the Nifty? It should be that it will try to continue its memory which it is created in the close drive. The close drive memory was quite bullish, that it was any downfall was bought into, and there was a generation of a demand which should be continuing towards upside. So ये कल हो सकता है कि कल भी हमारे upside movement ये दे थोड़ा बहुत, और यहाँ पे black line ये यहाँ पे है, so which is quite far away. So there is a lot of movement which is there, a lot of room is there for the Nifty to uh, ride on the upside. Now whereas on the downside, if in the Nifty opens gap down, then it will try to take some support at the black line and try to also fight with the open interest which is at 17,700 and try to take a support from there. Now in the event of a gap up opening, we can see that there might be an event of some kind of profit booking. So a gap up opening can lead Nifty to a little bit sluggish and sideways movement and some kind of volatility, and being an expiry day, it can be a very typical expiry if there is a gap up opening in Nifty. Now I have already strategized something for you. For a smaller account in Nifty, I have made this strategy of selling 17,800 call and puts the straddle, and I have converted it into iron fly to have a premium benefit of around 4,50,000 strategy. The maximum profit is coming at around 45,000. Now if you look at the risk reward, like risk adjusted returns, that should come around 20,000. So that will be probably around 5% or so. So 5% is good amount of return from this strategy. Now if I am to plot this strategy on the graph and make a sense of it, like what would be the neutral zone. So so you can see that the neutral zone would be somewhere around quite wide if you deploy this strategy. So the analysis which we made according to the way the Nifty will open tomorrow, so we are quite safe in terms of the strategy here. So you can deploy this strategy and requires only 4.5 lakhs. Now let's head toward the Bank Nifty, and in Bank Nifty we have very comfortable range in terms of the black line, and on the upside it is quite limited because already Bank Nifty has given a quite a run, and 39,620 would be the point of the black line, which should act as a resistance. If it hits here, it should come down and give some kind of respect to the black line here. Now support is quite far away, so you should not be worry about the black line on the lower range, but you can expect that there would be some kind of support would be taken at the point from where it originated a bull run today in the morning. So this would denoted by the red line, the price action, pure price action line. Now if we are to make a sense how the Bank Nifty would open tomorrow and what would be the movement, then a very flat opening would mean that it would quickly run on to make and kiss the black line and then give some reaction to it, and then the expiry can be quite typical and sideways movement. In the event of a gap down opening, it would mean that something has changed in the market from the scenario where it was opening gap up and continuing the trend. So something basically or fundamentally has changed. So that would demotivate the bulls and can lead the market a little bit lower, and the market can quickly go on to fill the gap and be very much volatile in the case of a gap down opening. Now in the event of a gap up opening, that means already there has been a much of a heat on the upside, so that heat would lead to some kind of profit booking and can take some resistance at the black line and can be a sideways movement in the later half of the day. Now I have made two strategies here for the Bank Nifty, which is for the larger accounts. So one is the iron condor, and this strategy is simply asking you to sell 39,000 PE, 39,500 CE, both being hedged by these strike prices. You can pause and check upon it, and it requires estimated margin of around 10 lakhs. You can scale it down, make it 50%, so it would be coming around 5 lakh, or you can scale it into one fourth, it will come around 2.5 lakhs. So you can estimate that the maximum profit is around 78,000, 80,000 or so. So even if you scale it down by 4 times, it would come around 20,000. So it is also a quite decent strategy which will give you around roughly around 4 to 5% very easily. Now the second strategy which I have made, yeah, second strategy which I have made is the iron fly, and this also requires similar kind of margins, but you can see the profitability, the maximum profit is quite high, which is currently around 1.5 lakhs. And even if you get 50% of it, that is around 70,000 or 80,000, this would be a good enough to exit from the strategy. And you can pause and look at the strike which I have sold, that is 39,400, both at the money and being hedged by 28 rupees or 30 rupees premiums on both sides. Now if I am to plot the neutral zone for these both the strategies, then you can see that quite comfortably this strategy can work tomorrow. Even if there can be a wild moves in the Bank Nifty tomorrow, we are being supported by the black line on the upper side, and there is a lot of room for the Bank Nifty to move on the down the lower side, and we can always adjust the position. So for the iron condor, it would be a very comfortable range. Now for the straddle, there is some bit of a tight squeeze here, and if Bank Nifty happens to fall below, then you should be adjusting and scaling down your straddle as the situation falls into place. And if you move the straddle from 39,400, you can move it to 39,200 if there is a downfall risk. Now on the upside, there will not be any much of a risk if the Bank Nifty opens flat or opens gap up. There will not be much of an adjustments into the straddle. So that's it guys, that's it for the day. Let me also put some clarity on the on the chart here for the open interest. So again, a similar kind of data is there for the bank nifty, that is not to be concerned about. So you can see the call put writing was a little bit more heavier than the nifty, you can see here. So there is a much of a support for the bank nifty on the put side. Now on the open chain also, a very interesting factor is there similar to the nifties. So you can see that the puts are being placed very nearer and the calls are a little bit far away. So you can see there is a lot of room for both the indices to move on the upper side. And yeah, that's it for the plan for the tomorrow. I hope you will do best. So catch you guys tomorrow. Have a great day. Bye bye.